Overall, how bad are the tariffs? How much do you manufacture in China? And how bad will it be to export to the U.S.?
Well, I think there's no doubt that we are facing some significant headwinds from a combination of raw materials, currency headwinds, and also ongoing inflation. And increasingly, tariffs are a factor. And of course, if the announced tariff increases starting or increasing early next year come into effect, there's no question that we have to raise prices in the market to offset these cost increases. And we've started doing that already here in Q3 quite successfully. We're pleased with the extent to which we've been able to quickly offset these cost headwinds through pricing and through ongoing cost efficiency, and that's what we intend to continue to do.
You now estimate the negative year-over-year impact is around 3 billion kroner instead of 2.7 previously. What's changed?
What's changed is mainly the higher impact of tariffs and also to some extent more currency headwind in Latin America. Those are the main changes.
Okay, can you change your supply chain? Is there anything that you can do to mitigate it?
Well, I think what we are doing is we're continuing, as always, to work very hard on ongoing cost productivity, and that's part of our DNA. That's what we do every year. But on top of that, we are implementing cost-based price increases mainly in North America, driven by inflationary pressures and tariffs, and in Latin America, driven both by cost inflation and by these significant currency swings that we've seen. And again, as I mentioned, we have been successful in the third quarter of implementing those and getting the traction there.
How much more can you raise prices, and will it fully compensate what you're suffering because of tariffs and trade tensions?
Yeah, I mean, for sure, I think what we're seeing is something that's impacting to a significant extent all of our competitors, and I think what tends to impact the industry as a whole usually tends to get passed on to changes in consumer prices, and I expect that to happen this time around as well. Of course, the scale of the headwinds are higher than usual, and so we have to take tougher actions than usual. But we're doing that, and we're seeing several of our competitors doing the same thing.
I was going to ask you this very thing, Jonas Samuelson. Does it actually hurt your market share, or does the price increase pretty match some of your rivals, so you're not suffering from it?
If we look at this year overall, I think we're gaining market share in Europe quite consistently and profitably. I think in North America, if you exclude the impact of private labels, we've been actually gaining market share there as well with our own brands. In Brazil, it's been a little bit up and down throughout the year, but overall we're relatively flat on market share there as well.
You've lowered your market outlook for Europe and North America. What's the reason for this, and what's your outlook for demand for next year?
Well, we are guiding towards sort of the lower end of the range that we had previously indicated, and I think it's clear that the price increases that we and competitors are implementing does have on the margin a certain impact on both retail sort of attention and consumer demand. So that's what's really driving us towards the lower end of the outlook that we've given previously.